What we're given in this problem is a condensed income statement for daily needs first 2 years of business, year 1 and then year 2. We're also given a condensed balance sheet for the year ends, year 1 and 2. So I set up this accounting equation, and I have my beginning assets and liabilities and equity being all zero because it's its first year of business. I then went ahead and filled in the ending balances, which I get off of the balance sheet for year 1. So we had 900 in assets. We don't know what our liabilities are. We know our stock is 100 and the rest of equity is 200 for a total shareholders equity of 300. All right, so I'm going to go through figuring out the missing amounts, and I'd like you to remember good old reds. And so we can fill in what caused the changes in stockholders equity to go from 0 to 300. So I'm going to fill that in here. If you look at the information we're given, we know our revenues were 500. We know our expenses were, actually we don't know what our expenses are. We're told our dividends are 0, and we're told that our stock ended up with 100, so we must have issued 100. So what I'm missing here is expenses. So we're missing expenses, and I'm also missing net income. So I basically have an equation with two unknowns that I cannot solve for. So what you need to do is sort of a leap here, knowing that revenues minus expenses equals net income, and that I don't have that piece, but I do know down here that retained earnings has net income in it. So if you think about it, for year 1 we have the typical beginning retained earnings plus our net income minus our dividends have to equal our ending retained earnings. Well, we have right here, if you will, for retained earnings the following. Our beginning retained earnings were 0. We don't know what net income is. That's what I'm trying to figure out. We were told our dividends were 0, but we can see here that our ending retained earnings was 200. So I can, from that, gather that net income must have been 200. So if you plug 200 in here, if you plug 200 for net income, you have the ability to finish up the income statement. So we would put the 200 here, and then we can see that, knowing that revenues minus expenses equals 200, we see that we have 500. We don't know what this is, so we can solve for expenses. So we know that expenses must be 300. So I can put my 300 in there, and just to recap, I started with knowing my ending retained earnings. From my ending retained earnings, I was able to get to net income because we can see that they retained all of their earnings. And then what I was able to do is determine my expenses. What we're also missing from year 2 is our liabilities, but you can see here that we have our simple equation of the balance sheet where A equals L plus SE. So when you do A equals L plus SE and plug in what we do have, we can see that we have to solve for L. So you can rearrange your accounting equation, and when you do that, your formula comes out to be liabilities equaling 600. So let's check it out. You've got 900 of assets. $600 of those assets are creditors have claims to. The remaining 300 are the investors' claims. All right, year 2. I'm going to plug in the same type of information. I've got my revenues. I was given my expenses. I'm told that dividends for the year were 50. I also was given these ending balances, missing a couple. So let's go through trying to solve for what we need. And the first we're going to do is for year 2 is we're going to solve for net income. So in other words, I'm trying to get net income off the income statement. That's fairly straightforward, and that we know revenues minus expenses equals net income. So we get 200 for that. The next thing is we're to figure out what liabilities and retained earnings are. I really can't solve for my liabilities or retained earnings with two unknowns, so I can get to retained earnings because I do see here that I have all of that information. So when you take your beginning retained earnings of 200 minus your net income of 200, excuse me, plus your net income of 200 minus your 50 equals your ending retained earnings, and that is 350. So once you plug in your 350 here, we now can solve for liabilities similarly to how we did it in year one. So we rearrange the accounting equation, and our liabilities must have been $1,000. So it's very important to understand the relationships. You have to understand the balance sheet relationship, which is your assets have to equal your liabilities plus stockholders' equity. And that's broken down in between common stock and retained earnings. You have to understand the income statement is your revenues minus your expenses, and that's part of your retained earnings, which is your revenues, your beginning retained earnings plus your net income minus your dividends to get to your ending. And then that is all you need in order to solve for all those missing amounts.